these other tables that describe this market. Here we have a table I call the Market Performance Rankings by Price, Home Size, and Layout. And what I do in this particular table is I separate it out by price range, by size range, and by bedroom and bathroom count. I list in those particular categories information regarding the number of floor plans offered, the percentage share of those floor plans, total units that are being supplied within that particular price range, units sold, units available, the average monthly sales rate or total monthly sales rate for all floor plans in a given price range or size range or bed bath count, as well as the average per plan. And then the percentage share of total sales relative to the percentage share of total floor plans offered. I compare those two and it comes up with a deviation between those two. If the percentage share of sales is higher than the percentage share of floor plans offered, as it is in this first category right here, it produces a positive deviation, which when you compare that with all of the other deviations, the computer ranks that and shows you how market efficient that given category is. In this case, this first category between 150 to 175,000, a very affordable price range, ranks second in overall affordability. The first ranked category is the $175 to $200,000 price range, followed by the $200 to $225, followed by the $225 to $250. It's probably not a surprise to anyone, especially in today's market atmosphere, that the highest ranked price ranges are all below $250,000. That's where most market efficiency occurs right now, where these upper price ranges, where the percentage share of floor plans is higher than the percentage share of sales, marks a market inefficiency, and at least in the near term are price ranges that should be avoided. You get the same type of pattern by size range, where it's mostly those smaller size ranges, in this case below 2250 square feet, that are performing best, with the highest ranked size category between 1750 and 2000 square feet. And then by bedroom and bathroom count, the highest ranked category offers 4 bedrooms and 2 baths. A couple things. It's not surprising that there's a lot of bedrooms up there. There's a lot of families up there. And then also 2 baths, which tells me that it's probably single-story layouts that are performing best. They tend to be most energy efficient in a single-story layout, and the cost is reasonable at an overall average cost of $237,000, which is below that $250,000 ceiling that we had identified. You can see this information graphically as well on the next sheet. And so it's just another way to slice and dice this field information in such a way that it really identifies those patterns of market efficiency. Let's go to another table here. Let's actually go to the survey to survey table right here. This is one that many of you use, and you can see the way that this is pulled up by the computer. It gives you a 9-quarter comparison, what has gone on in this particular market area during the past 9 quarters, in this case from 3rd quarter 2008 to our most recent statistics in 3rd quarter 2010. Shows you the number of actively selling developments, base prices, incentives, square foot, price per square foot, inventory, and so on. What's interesting in this market area is the level of drop in overall inventory and actively selling new home developments. Now I'm going to show you something in this particular spreadsheet, and that is that just like that residential development summary that I showed, there's a lot of hidden columns in this particular spreadsheet, and I'm actually going to unhide those because it shows you historical information that goes all the way back to when we began our audit in 1st quarter of 2004. Now I've actually taken the liberty of pulling up this table beforehand and kind of reformatting it so that you can see year-over-year changes as opposed to quarter-over-quarter changes. So in this particular format, where I've expanded those rows and then hidden the quarters in between, I start at 3rd quarter 2004 and go all the way to a comparison of 3rd quarter 2010. These final columns do a 12-month and a 24-month comparison. So here you can see graphically what's going on in this particular market area, and it tells a very interesting story. One is, I'll just point out the total active number of developments. In the 3rd quarter of 06, where it peaked, there were 84 actively selling new home communities in this particular market area. Right now there's only 16. That is an enormous drop, and obviously it reflects a couple things. One is it reflects a lot of developments that have been closed before they've sold out, or put on hold before they sold out. Another is that as communities have sold out, they haven't been replaced. I mean, there's very few new home entries in this particular market area, and that will likely be the case for quite a while. The ramifications of that over time is that as we've had fewer players, the overall sales rate per development has actually picked up. You can see that it's climbed up from a bottom that formed in 2007-2008 of 2.1 sales per development to now the overall average is 3.1 sales per development. Fewer players, those players are getting a larger piece of the pie, even though the overall absorption level is quite low in this market with only 16 selling communities. Look what's gone on with inventory. It went from low inventory levels in third quarter of 2004 to extremely high inventories by third quarter of 2007 where it peaked. Now we're down to 780 finished lots represented at actively selling new home communities. Now there may be quite a bit more at inactive developments, but my point is that the distressed or that the level of finished lot inventory has burned off or is burning off in this particular market area, and it's much lower than it was a few years back. Even in terms of months of inventory, it's gone down, though it has crept up during the past year. It's well lower than it was about 4 years ago when we hit a 28.2 month inventory level in third quarter of 2007. Right now it's at 15.6. That still is a high level. It really needs to hit 12 months or lower in order to really define a tightening market. You can see what's going on in terms of overall price trends, where we peaked in terms of price per square foot at $157 per square foot in third quarter 2006. And have come down now to a low point of $105 per square foot third quarter 2009. It's actually crept up a bit during the past 12 months to $107 per square foot during the most recent quarter, though the overall absolute price has fallen as we've introduced smaller floor plans. You can see that overall concessions are also going down. Builders are reducing their level of concession. Obviously they've taken price drops in lieu of concessions. This gives you an enormous amount of information each quarter as we update this. So we hope you'll take advantage of our survey to survey new home market change table. Let's see if there's anything else that's kind of interesting to show you. I'm going to go to one more table in this particular webinar, and it starts with this scatter chart. This is fairly common, where you list price on the y-axis and unit size on the x-axis. And in this case, what we're doing is we're showing you every single actively selling new home development or floor plan that's selling, and they're color-coded by development. So you can see exactly what's going on in terms of where a development is positioned by lot size, by square footage, by price. It'll also list you the overall average sales rate. So you can actually go to our planning table. I'm just going to very quickly put in a kind of a dummy or sample community. And just going to kind of dummy some information in here real quickly. I'll put in 3 floor plans starting at 1750 square feet, 2000 square feet, and 2250. And now this will give you the actual price line for the new home market already. So if you're offering a home that's 1,750 square feet in the Antelope Valley, the overall average price for a new home product in that for that particular unit size is $207,000. For 2,000 square feet, it's $226,000 and $244,000. You can add this information in terms of the characteristics of the lots. We'll put this on a 65. Let's put on a 7,200 square foot lot, and no association due, no tax rate, and so on. We'll give it a targeted sales rate of 3. So those are our overall product profile. Now I haven't calibrated these prices to this absorption rate. I do that in site-specific reports, but without doing anything else, let me just actually move it in the report and show you what happens. The first thing it does is it moves it into a table that is arranged in order by unit size categories, and then within each unit size category it's arranged in order by monthly housing cost. So given my assumptions to generate this monthly housing cost, you can see where this is positioned at 207 with no homeowner's dues, no tax assessment. It's third to the least expensive in this particular array of competitive product. There's 2 floor plans that are less expensive, and several floor plans that may be less expensive in terms of absolute price, but when you add the other elements to it, they're actually more expensive in terms of monthly cost. So we change our pricing to refine market positioning, and you can see that if we go back to this and make some minor changes, and remove it from the table, move it back in, its overall positioning will change accordingly. You can see where Plan 2 is located and Plan 3. So even with that increase, you can see that it's still at the lower or less expensive end of each competitive array. And it shows up on the chart as well. So here's where it's positioned right now. Obviously, I haven't, when we're doing a site-specific report, we also measure demand based upon the strength of the economy that supports housing sales and prices, which may dramatically change this initial set of pricing that we've applied. But that's how we begin to position subject product in a site-specific report that we do. And that's how you can use this tool to do really that same kind of thing in this overall competitive market positioning chart. There's some other things that you can do. If I have time, I'll try one more thing, and that is that I've actually pulled up information regarding distressed housing and resales in this particular market. One thing I like to do is pull up resales and actually put them into this other chart. And there's a place at the side of this where you can actually import this information, and what happens is this chart will now show the resale price line and all of the resales in this particular market area. What you can see is for the Antelope Valley, resales are far lower in price than the new home market, which means that your pricing for this particular subject product should probably be more conservative because our resales are generating such a huge competitive effect at such a lower price. I'm going to import one more kind of information here, and that is information regarding foreclosure sales. Now, which is right here, foreclosure sales when the bank is selling it to a new owner. I'll do the same kind of thing. I'll put it in our chart over to the side, and it too will generate a market price line. It's this red line now, and each one of these yellow dots represent those foreclosures. So here you have a foreclosure sale price line, a resale price line a little bit higher, and here's our new home market price line. Not knowing anything else, obviously we're not taking into account specific site characteristics and everything else, but knowing the information that I do know, I would discount this a bit now. To really position it not only more effectively regarding new home competitors, but also more effectively regarding a huge amount of resales, including short sales, as well as foreclosure sales that are in this particular market area. That's the beginnings of how we do our site-specific reports. So we combine that with our economic data to really nail what we think is an effective pricing strategy that's calibrated to our specific sales rate. That's kind of how we begin that. And that's really all I wanted to show you this morning. Let me actually go back to our slideshow and just give you some basic information regarding our member services. If you want more information regarding Antelope Valley, I'll actually save these tables. If you'll contact Judy Duell or Sandy Rivera, I'll give them access to these tables so that they can email those tables that I generated today on the website. And that's it. Thank you very much for joining us this morning. We hope you'll join us next week, next Wednesday, for our Santa Clarita Valley webinar. Take care. Bye.